The Bitcoin roller coaster is going up as we rocket past 70K and continue a very volatile few weeks. Could this rally have legs? We go into all of the latest macroeconomic trends, which all seem to be pointing to the simple fact central bankers are at the end of the road and their gig is up. Are they getting ready to warm up the money printers? And what does this all mean for hard assets like Bitcoin? I'll give you a hint. It's bullish. Welcome to the Bitcoin Daily Show. This is Dante Cook, head of Swan Business. As always, if you have questions about Bitcoin, please send me an email to daily@swanbitcoin.com, and I personally will answer your questions to help you on your Bitcoin journey. We have one mission statement at Swan: do what's right for Bitcoin and Bitcoiners. So we're here to help. Send me an email. And with that, let's get into the show. Late last week, the Swiss National Bank became the first central bank to blink and started cutting rates since all of the other central banks started hiking rates globally. Mexico also cut their rates. The markets are implying that central banks everywhere in most major economies across the world will be cutting rates from here moving forward. Most major economies around the world are also forecasting lower inflation rates. But there's some problems with just cutting rates because you're forecasting inflation rates to go down. Things aren't so simple. Let's take the US as an example. The US debt to GDP ratio is over 123%, just shy of the all-time highs at 126% that we reached during COVID. The Congressional Budget Office forecasts that we will reach above 130% by 2034. But do you really think it's only going to take 10 years to get there? At this pace and rate that we're adding debt, we're probably going to pass that in the next few years. And why do they continue to issue more debt? Well, taking a look at this chart, it's clear why. The $1.2 trillion in interest payments are probably the likely result. You can see it clearly in a chart like this, showing that the 2-year auction was the highest that it's ever been. Issuing debt isn't a problem if other people want to actually buy it. Here lies the problem. Foreign holdings of US debt as a share of the overall total debt amount is the lowest that it's been since the late 1990s. Central banks all around the world are opting not to buy US treasuries in favor of assets like gold. Take China, for example. In January alone, they bought almost 120,000 kilograms of gold instead of buying US treasuries. And you can understand their dilemma. I mean, look at this stat. Since 1800, 51 of 52 countries that had a US debt to GDP above 130% defaulted on their currency. So why would you hold the debt or the currency of a country that's likely going to default? So what's an option that you can take? You're probably not like China or some central bank or some global sovereign nation, and you can hold gold in a vault, store it and guard it and secure it 24 hours a day. What you can do, like China or another sovereign foreign nation, is buy, hold, and store Bitcoin for yourself. And the best part is, we're still early. People still don't quite understand why people would own an asset like Bitcoin. James Lavish explains this really well.
And there's a similar adoption going on with Bitcoin and reluctance to believe in it, just like people didn't believe that consumers who put their credit cards online to buy things on Amazon. There's a similar like skepticism about it, that it's not worth anything. I don't understand it. It could just be copied. It could be replicated. What if Satoshi shows up and decides that he wants to double the distribution of coins? What if he wants to dump his million coins on the market? Like, there's so much. And then you've got the disinformation coming out of Greenpeace, which is, are you kidding me? So there's a lot of confusion. Mainstream media is still confused about it. People are not educated about it. That's why, yes, use case is so important, but if people aren't educated about it and they're not learning about it, it's just going to it's going to continue to take a long time, which is why I'm encouraged, because I talk to people from my old world and they're still confused on it. They don't really understand the difference between Bitcoin and Ethereum. They don't understand how Bitcoin can be is really immutable. They don't understand the network effects, how it's absolutely incredible. And it's not that they're dumb. It's that they haven't done the work. They don't care to do the work, and they're not incentivized to do the work. Then the fiat system is working great for them. But let's just see what happens in this. I think there's going to be a surge in understanding from both the ability to actually buy it without, risking coins and people thinking that it's a drug deal, like you're just buying an ETF. That's number one. And then the second thing is we're talking about either a crack up boom or a quasi crack up boom where people are going to be forced to learn about it. So when when you have SVB times 10, people are going to step back and say, hold on a second. Wait a minute. Like, explain this Bitcoin thing to me, because maybe I do want my money in something else other than the US dollar or a treasury, a T-bill.
But one piece of advice that I give to anyone that's getting into Bitcoin: don't trade it. And definitely don't be like this group of people. There are $6.6 billion worth of shorts that are ready to be liquidated on the next run up in Bitcoin. And it looks like we might be testing that today with prices above 70K. Don't try to time the market. Do the simple thing. I mean, it's just math. The max amount that you can make shorting an asset is 100%. If it goes to zero, there's nothing more to short. But if you just look at the returns of Bitcoin by just going long over the last 12 years, you're outperforming that by 23%. Don't make this difficult. Just buy and hold Bitcoin. Don't get caught trying to trade Bitcoin on a roller coaster like this. Just enjoy the ride. If the Fed decides to cut rates, we know that they're not making a mistake. They're doing it on purpose. Luke Gromen explains it well in this chart right here. They are simply trapped by the decisions that they've made in 2000, in 2008, and in 2020. There is nowhere else to go. Cutting rates will likely lead to booming asset prices, runaway inflation, or a default on the currency. Keeping rates high will lead to a forced depression, boomers not having the assets in their stock portfolios that they need to retire, or a default on the debt, which is defaulting on the currency. That is why Bitcoiners say all roads lead to higher Bitcoin prices. It's an exit to the impossible situation that you're facing every single day through no fault of your own. But regardless of whether it's your fault or not, you have a choice. You have an opportunity to exit the system. Buy Bitcoin. If you want more great content like this, please do like this video, share it with other people, and subscribe to the channel. But there's also an exclusive opportunity that I want to invite you to. Our free webinar with Larry Lepard, who's been managing money for over 40 years and can tell you exactly why he believes in Bitcoin and the impact that it can have in your portfolio. Please sign up for the webinar with the link in the show notes. You won't want to miss it. And that's it for today's Macro Monday episode. Thanks for tuning in with us. This is Dante Cook with Swan.com. Happy stacking.